The U.S. is about to hit a financial wall, an unimaginable $10 trillion in debt due in just a few years. But here's the catch. Foreign buyers aren't interested. The big question is, what happens when no one is left to buy America's debt? You might think the U.S. could simply print more money, but it's not that simple. In fact, the world's largest economy might be on the brink of its biggest financial crisis yet. And it's happening much faster than anyone expected. Stick with me, because we're about to explore what's really going on and how this $10 trillion debt cliff could change everything. This isn't just about a massive number or a theoretical problem. It's a ticking time bomb. The United States faces a monumental challenge in 2026. $10 trillion in bonds maturing, and no one wants to buy them. You might be wondering, why does this matter to you? Well, imagine a country so deep in debt that even its closest allies won't touch its financial products. The world's largest economy on the verge of default. But here's the thing. This isn't just a U.S. problem. It's a global issue that could shake up everything from your bank account to international trade. What happens when foreign nations start looking for safer options, leaving the U.S. to deal with its debt alone? The U.S. is in a dangerous situation. Right now, the only thing standing between America and financial collapse are the primary dealers, big banks like J.P. Morgan. But there's a catch. They don't have the money to buy all the bonds the U.S. needs to sell. This isn't a hypothetical problem. It's happening right now. Just last week, no foreign buyers showed up for a major bond auction. So what did the U.S. do? It turned to the banks. But here's the twist. The moment these banks are forced to step in, the interest rates soar. Why? Because the banks know the risk. They know that if they buy up this debt, they're sitting on a ticking time bomb. And when the rates spike, it signals something even more troubling. The U.S. may not be able to pay back what it owes, at least not without more borrowing. But what happens when the debt is no longer sustainable? Notice what's missing in all this. No one is talking about what happens when the banks can't hold the line anymore. Now, this situation isn't isolated. In fact, it's a reflection of a larger trend happening worldwide. The U.S. is not alone in facing massive debt. But unlike other countries, America has been able to rely on the goodwill of foreign buyers until now. The reality is, as global powers like China and Russia pivot away from U.S. treasuries and invest in gold, the U.S. is left with fewer options. This isn't just about numbers. It's about the U.S. losing its financial leverage. And here's the most concerning part. This is becoming normalized. The very idea that the U.S. Treasury can rely on banks to buy up its debt rather than foreign investors, that shouldn't be normal. It's a dangerous precedent, one that could set off a chain reaction. If the banks start to pull back, the U.S. could be left with no safety net. The entire financial system could buckle under the weight of its own debt. What does this mean for the average person? Well, it's not just about numbers anymore. This could affect everything from interest rates to your savings account. And things are escalating faster than anyone expected. Now, it's not just about the banks stepping in. There's something even more troubling lurking beneath the surface. In recent weeks, some of the world's biggest central banks, like the Reserve Bank of India, have pulled billions out of U.S. Treasury bonds, opting instead to aggressively stockpile gold. Why? Because the risk of holding U.S. debt is no longer worth it. This shift is significant. Countries are beginning to hedge their bets, preparing for a future where the U.S. dollar isn't the dominant global currency anymore. But here's the kicker. The moment foreign investors back away from U.S. debt, it creates a massive hole. Who will step in to fill it? The primary dealers, like the big banks, are already overloaded. And when the U.S. Treasury has to raise rates to make bonds more attractive, it's only going to make the problem worse. This situation is unsustainable. It's a game of financial chicken. And right now, it feels like the U.S. is about to blink. As the situation escalates, things are moving faster than anyone predicted. Just last week, it wasn't just one bond auction that failed. It was a pattern. The U.S. Treasury couldn't sell enough bonds, and the primary dealers were forced to buy them up. This has become a critical pressure point, but that's not all. The debt is growing at an alarming rate, $1 trillion every 75 days. Yes, 75 days. That's an insane pace. Now, this isn't just about numbers anymore. It's about the very mechanics of the global economy beginning to lose control. The U.S. is hemorrhaging debt faster than it can keep up, and at some point, even the biggest banks won't be able to bail it out. What happens if this continues? The risk is clear. The U.S. could face a fiscal meltdown. And if it does, it's not just the government that will suffer. Everyone, whether you're an investor, a worker, or just an average citizen, will feel the pain. This is more than a financial crisis. It's a systemic collapse in the making. Now, let's take a step back and think about how this all impacts you, the average person. What happens when the U.S. can't pay its debts? Well, the effects won't be felt just by Wall Street or international investors. It'll trickle down to you. Higher interest rates, shrinking savings, inflation, that's what you're looking at. And this isn't a distant future, it's happening now. Imagine paying more for everything, your mortgage, your credit card, your student loan, even the food you buy. As the U.S. struggles to stay afloat, it'll pull on every lever it can, from printing more money to inflating the value of the dollar. But that comes with a price. It'll erode the purchasing power of your dollar. Everything you thought was stable could shift in an instant. If this sounds familiar to you, or if you're worried about how this could affect your financial future, drop a comment below. Because the question isn't just what happens to the U.S. economy, it's what happens to you when this bubble bursts. This isn't just a financial issue, it's a deeper systemic problem. The reason the U.S. is in this position is because of how the system is built. From the very start, the U.S. has relied on two things: the global demand for its debt and the Federal Reserve's ability to manage interest rates. But what happens when those two things start to fail? When countries no longer want to hold U.S. debt and banks can't keep up with the borrowing demands? The system is built on leverage, but too much leverage means everything is fragile, and the more the U.S. borrows, the weaker its financial position becomes. You can't keep borrowing money without facing consequences. It's just a matter of time. And what's even more troubling is that this system is propped up by fear and spectacle. When the U.S. faces its next crisis, the world will watch. But the real question is, will the U.S. be able to control the narrative, or will it collapse under its own weight? The world's financial system is built on trust, and when that trust starts to crumble, the entire system is at risk. So what happens next? There are two possible paths forward. The first is that the U.S. doubles down on its strategy, continuing to rely on its own banks and the Federal Reserve to prop up the debt, hoping that foreign buyers eventually return. But that's risky. It's a high-stakes gamble with no guarantee of success. If the banks can't sustain the bond buying, or if global demand for U.S. debt continues to fall, the whole system could unravel. The second path is far more unsettling: a massive financial restructuring. The U.S. could be forced to default on some of its obligations, or it could find a way to drastically reduce its debt through drastic measures like a devaluation of the dollar, or even government-backed financial instruments like Bitcoin or federal land sales. But that would come with consequences, huge systemic consequences that would affect the global economy. The uncertainty is staggering. There's no clear answer, and the situation is shifting rapidly. But one thing is for sure: whatever happens next, it's already in motion. Here's the thing. This $10 trillion debt cliff isn't just about numbers on a balance sheet. It's about trust, power, and the future of the global economy. The U.S. has been the world's financial anchor for decades, but that anchor is beginning to rust. The big question is, can America pull itself back from the brink, or is this the start of a new financial era? The world is watching closely, and what happens next will shape the global economy for generations. If the U.S. can't handle its debt, we could be looking at a shift in power away from the dollar and towards something else entirely. Stay tuned. This story is far from over, and the next move could come sooner than we think. For continued analysis on what happens next, make sure to follow and subscribe. We'll be keeping you updated as this crisis unfolds.